What's going on, fellow investors and stock market traders? My name is Jeff, and this is the 3 stocks to short video for October 2019. So, what is going on in the market right now? Tell me about it. The indexes are dropping. The Dow Jones has lost almost 900 points in 2 days. And so, what does this mean? What does this mean to people that play the stock market? Our long-term portfolios are losing value. Some of our favorite stocks are getting cheaper and more affordable, but we all see that account balance dropping down. Now, however, those of us that play short sales and play put options on stocks, that side of my portfolio is actually going up. That's why I always try to encourage everybody to play the short side of stocks. And one thing to always keep in mind, I probably mention this in every single video I make, it does not matter if we are in a bull market or a bear market, bad stocks with bad earnings are always going to continue to trade down. And there is always an opportunity for a well-studied and a well-prepared short seller. Now, this should not ever be the overwhelming majority of your portfolio. Like I said, guys, I only go short or buy puts with about 15% of my money. I also do not get greedy on these positions. I'm not going to wait till the indexes are down 2,000 or 3,000 points to cover. I set very reasonable goals, and then of course I get out of those trades. And we did nail a 150% trade in Trade Alerts Pro, guys. For those of you that are in my stock market group, you do know some of my strategies. And you know that, like I mentioned, sometimes it's right before earnings. You might want to take that first position in a put option and then hit it right again shortly after earnings. There's a lot of good strategies to use. In this video tonight, though, guys, we're going to talk about 3 stocks I feel you are in a good position to either go short on or buy puts, especially in this volatile market, guys. I don't think the indexes are done trading down. Volatility means we are going to be making some money. So, make sure to drop a thumbs up on this video, guys. I appreciate all of your support. And make sure to subscribe to the channel if you have not done so already. So let's go back to the 17th of July, guys. That's when I published this video about is Netflix a buy after the 13% drop. And I really issued a lot of warning, and I did explain that I would be going short on Netflix on any significant move to the upside. Okay, now I have shorted Netflix a couple of times. I've had some long-term puts pay out pretty good, and honestly I just sold them too soon. I know this stock has a lot of upside potential. Again, I set reasonable goals. I get that reasonable number that I was looking for, and then I sell out. You will never go broke taking gains. You can go broke by holding a trade too long. On the 17th of July, though, Netflix was still trading at $360+ before earnings, and would you look at that, it's lost over $100 of value since that earnings report. Now, guys, I'm not totally convinced that Netflix has hit a bottom, and they're gonna be reporting earnings on the 16th of October. So we have exactly 2 weeks from today, and I think you're going to see just a lot of volatility going into earnings. I think the underlying sentiment is that, yes, guys, Netflix is still a great company. This is almost what you'd call a legacy company that's very fundamentally overvalued. Their growth has certainly slowed down, and at one point I felt their market cap was just completely wrong. I did not feel like it matched the company, even when they were putting out really good earnings. If you look at the PE ratios, this stock continues to be overvalued. Here is my vague game plan, okay? I am currently covered out of any short positions on Netflix. I do not own this stock long, but I'm going to watch its movement as it approaches the next earnings report, and I'm going to try to short it or ride some put options based on momentum, okay? You can see here I went back to the 17th of July for a very specific reason, is there's usually a lot of momentum after earnings. That's what I like to watch for, okay, guys? I like to watch for that rebound, assuming Netflix has disappointing numbers and their guidance gets cut again. I have a lot of respect for this company. I know I've seen it trade up $40 and $50 in one day before, and the fact that subscriber growth has slowed so massively, I would probably look for that opportunity to cost average down. But I would rather get those puts up towards the top, so that way I'm not holding the bag for a long period of time. Like I said, guys, I see Netflix trading all the way down to $200 a share if they have disappointing earnings. And as far as a long-term position, I would probably be sold out of it before they report in 2 weeks. So keep a very, very close eye on Netflix. All right, guys, so the second company to short or buy puts for in the month of October is going to be Zillow, ticker symbol Z. Now, I will even share, guys, this is actually an alert I made in Trade Alerts Pro. And as you can see here, guys, I'm actually sitting on a contract right now that's up 133%, and I'm going to continue to ride it. This is a true earnings play, a company I do not feel for the long term is going to grow, at least for a short period of time. And by short period of time, I mean 6 months to a year. It was the big guidance cut, and we are not seeing a reversal in this chart pattern. The reason I feel so confident in this trade is, number one, the condition of the market. Okay, all signs, there's a lot of speculation that we are approaching a recession. There is a lot of websites that are very similar to Zillow, and even go and talk to any real estate agent or real estate broker. They never have anything good to say about Zillow. It has constant inaccuracy problems. And just like I said, this is kind of a hollow company. The earnings were very hollow. And now I will even share this with you. Right now there is 26 million shares being held short. Their ratios for days to cover is about 9.4. The short percent of float at 22.19%. So get this, guys, as this stock has been trading down, the short percent of float has been going up. Usually it's the exact opposite, okay? Once a stock starts trading down, that float will come down because short sellers are covering on their position. And as you can see right down here in that bottom column, it has gotten an 8% increase. So there's more and more short interest pouring into Zillow. And the beautiful thing about that one contract I am currently holding right now, guys, is it doesn't expire until January. So I still have 3 more months. And I think we are going to see much nastier conditions over the next 3 months. In my opinion, I think Zillow continues to disappoint. I don't really see anything stopping it from trading down to $25 and even $20. That's kind of my target, okay? That's considering I have 3 months to sell those put options. Somewhere between $20 and $25 is going to be my exit. I'll have to reevaluate everything, and I'm sure an earnings report will come and go by then. And I'm sure even some of you are familiar with Steve Eisman. This is the man that the movie The Big Short was based around. He really predicted the 2008 recession. He was the one that planted this idea that there is a lot of rising risk in Zillow stock. It is very, very overvalued, and he is also short. So something to think about. I would put Zillow on your watch list. And lastly, guys, the third company I'm going to be looking to go short on in October is Shake Shack. Now, honestly, guys, this is actually one of my favorite restaurant stocks to own. I just feel like it is a bit overdone. Back in 2015, when this stock just took off immediately from its IPO, traded up well over $90. I remember a lot of people comparing it to GoPro. I don't know if any of you remember the story of GoPro. It was once a $100 per share stock. Now go look at it. I think you will be kind of amazed at how much GoPro has fell off. And this just felt very similar. That IPO felt very similar. Now, over the past couple of years, this stock did have a period of time where it pretty much traded sideways, had good earnings, not great, but over the past year is up 50%. And I just feel like this one needs to cool off a little bit. Most analyst price targets are somewhere between $70 and $75. So that unfortunately puts Shake Shack roughly $20 to $25, over its analyst price targets. Now, I know a lot of you say, hey, look, the stuff analyst says it can go in one ear and out the other. But hedge funds do model a lot of the trading they do based on analyst price targets. And guess what? They're spending millions and billions, where most of us are spending hundreds and thousands. So they can move these stocks a lot more than we can. And again, my thesis comes back to the negative pressure in the market right now. I do feel like we are going to be up against some very turbulent months. And there is a very noticeable reversal in Shake Shack right now. On the 4th of September, this was at $105. And then even just 2 weeks ago, it reached that $104 level once again. And now $12 have fell off. I feel like we're in a total reversal. And in my opinion, I think a bottom will set back in on Shake Shack around $60 to $70 per share. Again, this is actually a company I'm very, very bullish on that I feel has just got too far ahead of itself. Maybe similar to Roku and Shopify, that I feel like it is time to cool off, and we are watching it very, very closely in Trade Alerts Pro. So anyways, guys, that's all I got for the video. Make sure to go down to the comment section, share some companies that you might either be going short on or buying puts against. I really love all the conversation we have there, guys. Thank you as always for watching the video, and have a great day.